How life insurance living benefits can fit into a practical family plan. Hi everyone, my name is Jay Cohen, and I'm a licensed agent with Gibbs Insurance and Financial Services located in Ocala, Florida. Thank you for being here and for giving me a little bit of your time today. Our topic is planning for health uncertainty. I choose these words carefully because none of us can put a health event on the calendar. We cannot predict whether a serious illness will happen or when it will happen, or even how long recovery might take, or who in the family will need to step in. But we can think ahead about how the financial side of life would hold up if your health suddenly changed. And I want to say right up front, this is not meant to be a scary conversation. I'm not here to throw worst-case scenarios at you for 45 minutes. My goal is the opposite. I want this to feel practical, calm, and useful. We're going to talk about what can happen when health issues create pressure on incomes, savings, family routines, and care decisions. Then we're going to talk about a tool that many people do not fully understand about life insurance with living benefits. A lot of people still think life insurance only helps after someone dies. That is still the main purpose of life insurance, of course. But some policies may allow access to a portion of the death benefit while the insured person is still living, provided certain health conditions are met. Those are often referred to as living benefits or accelerated death benefits. Now, they are not magic. They have rules, limits, and trade-offs. They are not the same across all policies, but they can create choices at a time when choices really matter. So we will keep the language plain. We will talk about what living benefits can do, what they cannot do, what questions to ask, and how to review your own coverage in a sensible way. One more thing before we get into the content. Please listen for situations that sound familiar in your own life. Maybe you're thinking about a spouse. Maybe you're thinking about aging parents. Maybe you're thinking about your own retirement plan and wondering what would happen if a health event changed the math. You do not have to solve all of this today. The win today is awareness. If you leave knowing the right questions to ask and the right documents to review, this will have been worthwhile. As we go, I will use examples, but not because every example fits every family. Examples are just a way to make the planning questions easier to picture. Your own answer may be different, and that is exactly why the review matters. The money pressure often comes from the ripple effect around care. When people hear the phrase health uncertainty, most people immediately think about medical bills. That's understandable. We think about deductibles, co-pays, prescriptions, hospital bills, doctor's visits, and maybe physical therapy or follow-up care. But in real life, the financial pressure often comes from everything surrounding medical care. A serious illness or an injury can interrupt income. Maybe the person who is sick cannot work for a while. Maybe a spouse or a child cuts back hours to drive to appointments, help at home, or simply be present. Even when health insurance is doing its job, the household feels the strain. Then there are the costs that do not always show up in the first conversation. Travel to specialists, parking, meals away from home, extra childcare, somebody coming in to help with cleaning, bathing, cooking, transportation, or errands. Maybe the home needs a ramp, grab bars, a safer shower, or temporary bedroom on the first floor. And here's the part that is easy to miss. Health uncertainty also creates decision pressure. Families start making choices while they are tired, worried, or emotionally stretched. They may ask, can we afford help at home? Should we use our savings? Should someone stop working? Should we delay retirement? Should we put something on a credit card and figure it out later? That is why planning matters. The point is not to predict every possible medical event. The point is to ask, if something changed, where would the pressure show up first? Where would we want flexibility? What money would we want to protect? Who would we need to support? Living benefits can fit into this conversation because they may create access to a policy value during a qualifying health event. But before we even talk about the product, we have to understand the problem. The problem is not just a bill. The problem is that the health event can disrupt the whole rhythm of the family. Let me give you an example. Imagine someone has good health insurance, but they need treatment 2 hours away. The medical bill may be manageable, but now the spouse is driving back and forth, buying meals on the road, missing work, and trying to keep the house running. That is the real cost. Or imagine a recovery that takes 6 months instead of 6 weeks. The budget may have been fine before, but now income is down and expenses are up. The gap is what planning is trying to address. If you are listening as a parent, spouse, or an adult child, this is the part I would underline. The financial impact of illness is rarely just one bill. It's a chain reaction. Planning is how we keep that chain reaction from pulling the whole family off balance. The question is not only, can we pay? It's also, what choices do we want to preserve? I like this slide because it gets to the heart of the planning conversation. A good plan protects choices, not just dollars. Money matters, obviously. We need dollars to pay bills, hire help, keep the household going. But what people really want in a health crisis is the ability to make thoughtful choices. They want to choose care based on what is best for the person, not only what is cheapest that week. They want to avoid draining the savings meant for a spouse's retirement. They want time to breathe before selling assets, borrowing money, or making decisions they might not have to make under calmer circumstances. Think about a couple where the spouse becomes seriously ill. The healthy spouse may want to be present, but maybe they're still working. If there is no financial cushion, every day away from work creates stress. If there is some flexibility, the question changes. It becomes, what do we need to do right now, and how do we manage life around that need? Or think about an adult child who wants to help a parent. That child may be juggling work, their own family, and travel back and forth. If the parent has a plan that can help pay for care or support, the child may not have to carry as much of the burden alone. So when we talk about living benefits, I don't want us to think only in terms of policy feature. I want us to think in terms of choices. Could this benefit help someone stay home longer? Could it help pay for care while other assets remain untouched? Could it give the family time to make decisions thoughtfully? That is the standard I would use. Not, does this sound impressive in a brochure? But if life got hard, would this create useful choices for people I care about? This is also why I do not like one-size-fits-all answers. One family may care most about protecting surviving spouse. Another may care about staying in the home. Another may want to avoid becoming financially dependent on adult children. Another may have a business, a mortgage, or a special needs family member. So the right plan begins with people and choices, not the policy name. Once we know that choices matter, we can ask whether the current insurance plan helps protect them. A helpful question is, if a health event happened, what would we be most afraid of losing? Income, independence, time at home, a spouse's security, the ability to choose care? Once that answer is clear, the planning conversation becomes much more focused. They may let you access part of a life insurance death benefit while living. Now, let us define living benefits in simple language. Life insurance traditionally pays death benefits to beneficiaries after the insured person passes away. That is the part most people know. Living benefits may allow the policy owner to access part of that death benefit while the insured person is still alive, if the policy's conditions are met. You may also hear the phrase accelerated death benefit because the policy is accelerating some of the benefit that would otherwise be paid later. The key phrase is if the policy's conditions are met. This is not an ATM. It is not a savings account. It is not a benefit you can use simply because life is expensive or retirement is tight. The policy must define the qualifying event, and the insurance company must approve the claim based on the policy language. In many cases, living benefits are provided through a rider. Sometimes the rider is included automatically. Sometimes it costs extra. Sometimes it's available only on certain policies or in certain states. And even when two policies both have the same living benefits, the details may be very different. There is also an important trade-off. If you access part of the death benefit while living, the amount left for beneficiaries later is usually reduced. Depending on the policy, there may be fees, interest, liens, discounts, or other calculations. So this is not free extra money sitting on top of the policy. It is a way to move some value forward when a serious health situation qualifies. That does not make it bad. In fact, it can be extremely helpful. It just means we need to understand what it is before we can count on it. The right question is not simply, does my policy have living benefits? The better question is, what kind of living benefits, what triggers them, how much could be available, and what happens to the rest of the policy afterward? A useful way to think about this is that life insurance has a primary job and sometimes a secondary job. The primary job is still protection for beneficiaries. The secondary job, when living benefits are included, may be accessed during a qualifying health event. That difference keeps expectations realistic. We are not replacing emergency savings, disability insurance, long-term care planning, or health insurance with one rider. We are asking whether this policy can add another layer of flexibility when the family needs options. Also, remember that living benefits are usually easier to understand before a claim is filed. When a family is already dealing with a diagnosis, it is harder to read policy language calmly. That is why I like reviewing these features in advance when nobody is under immediate pressure. Terminal illness, chronic illness, critical illness, and long-term care riders can work differently. This is where the language can get confusing, so let us slow down and separate the common triggers. Terminal illness benefits are generally tied to a physician certifying that the insured person has a limited life expectancy. The exact definition can vary by policy. Some policies may use a 12-month life expectancy. Some may use a 24 months. And some may phrase it differently. The important idea is that terminal illness is tied to a severe diagnosis and limited life expectancy. Chronic illness benefits are different. They are usually tied to the insured person being unable to perform certain activities of daily living, often called ADLs, or requiring substantial supervision because of severe cognitive impairment. Activities of daily living are basic daily functions such as bathing, dressing, eating, transferring, toilet, and continence. Again, the exact policy language matters, but that is the general idea. Critical illness benefits are usually tied to a covered diagnosis such as heart attack, stroke, cancer, or another listed condition. This can sound straightforward, but it still depends heavily on the policy. What conditions are covered, how severe the condition can be. Is the benefit a lump sum, a percentage, or calculated another way? Are there exclusions? Long-term care riders or linked benefit products are another category. These may be designed more specifically to cover the cost of qualifying long-term care services. But they can involve their own underwriting, premiums, benefit periods, elimination periods, and claim requirements. So if someone tells you my policy has living benefits, that's a good start. But it is not enough information. We need to ask what kind: terminal illness, chronic illness, critical illness, long-term care, more than one. Then we need to ask the questions about documentation. What is required? And how is the benefit calculated? This is also why a policy review can be valuable. The words on the front page of a brochure may sound similar, but the fine print can lead to a very different outcome when a family actually needs help. I also want to point out that claim language is not just technical trivia. It affects whether a benefit is usable. A person may be seriously ill and still not meet a specific policy definition. Another person may qualify because they need help with daily living, even if the diagnosis is not the focus. That is why I want people to read beyond the headline. The rider name matters less than the trigger, the documentation, the benefit, and the process the family would actually have to follow. One practical step is to ask for the rider pages or policy illustration and look for the actual definitions. Do not rely on the summary page. The summary can be helpful, but the policy language is what controls the claims. Using living benefits can help during a crisis, but it changes the policy. This slide is the balanced part of the conversation. Living benefits can provide flexibility now, but they can reduce benefits later. On the positive side, access to a living benefit during a qualifying health event may help a family avoid some very hard choices. It may help pay for care at home. It may help replace an income for a while. It may help cover household expenses when the person who is sick or the caregiver cannot work the same way. It may help protect emergency savings or retirement assets from being spent too quickly. For some families, that flexibility can be the difference between panic and a plan. It can create breathing room. It can give the family time to compare options instead of choosing whatever is immediately affordable. It can reduce the feeling that every decision has to be made under pressure. But we also need to be honest about the other side. If a policy accelerates part of the death benefit, the remaining benefit for the beneficiaries is usually reduced. If the original purpose of the policy was to protect a spouse, children, or other loved ones after death, using part of that benefit early changes that plan. There may also be costs or adjustments. Some policies charge fees. Some discount the accelerated death benefit based on life expectancy or other factors. Some create a lien against the policy. Some affect cash value, premiums, or future performance. These details matter. Tax and public benefit questions can also matter. IRS guidelines generally recognizes that certain accelerated death benefits for terminally or chronically ill insured individuals may be excluded from income. But the exact facts and limits matter. Medicaid eligibility, estate planning, and other public benefits may also be affected. That is why I do not want anyone making a decision in isolation. If the numbers are meaningful, bring the right advisors. So the question is not, are living benefits good or bad? The question is, when would using them make sense? What would it solve? And what would it change? A good planning conversation also asks, what is the money for? If the death benefit is mainly intended to protect a surviving spouse, we should be careful about using too much of it early. If the immediate care need is creating a serious crisis, using part of the benefit may make sense. There is no automatic answer. The decision depends on the family, the diagnosis, the available savings, and other insurance in place, and what the beneficiaries would still need later. This is also why I would rather have a thoughtful conversation than make a blanket recommendation. A living benefit claim can be a very good decision for one family and the wrong decision for another. The facts matter. The right fit depends on what you want the policy to do. Different policies solve different planning jobs. And this is where people sometimes get frustrated because they want one simple answer. The truth is that the right type of coverage depends on the job you want the policy to do. Term life is often used for temporary needs. For example, a family may want coverage while children are young, while a mortgage is being paid, or during the years when income protection is most important. Term coverage is often more affordable for a given death benefit, especially for younger and healthier people. Some term policies may include living benefit riders, but you still have to look at the details. Permanent life insurance is designed with a longer horizon. It may be whole life, universal life, index universal life, or another form, depending on the product. Permanent policies may include cash value, lifetime-oriented coverage, and sometimes living benefit options. Because they are built differently, the premium commitment and the policy management are different too. Then there are hybrid or linked benefit products. These are often designed for people who want life insurance protection, but are also concerned about long-term care needs. They can be appealing because they may provide benefits if the care is needed and still provide value if care is never needed. But they also require careful review because the structure, cost, inflation options, and benefit rules vary. This is why I like to ask, What job are we hiring the policy to do? Are we protecting income, covering a mortgage, creating final expense money, leaving a legacy, creating care flexibility, protecting a spouse from spending down assets? The answer may lead to different policy designs. And sometimes the answer is not to replace what you have. Sometimes it's to understand and adjust the beneficiaries, add coverage, or compare options. The product should follow the planning job, not the other way around. This is where a review can prevent frustration. Sometimes people compare two policies only by premium and death benefit, but they are really not the same tool. One may have stronger living benefit language. One may have cash value. One may have a premium that can change. One may be temporary. The cheapest policy is not always the best fit, and the most expensive policy is not automatically better. The question is whether the design matches the job you actually need done. For people who already have coverage, this may be very reassuring. You do not always need to start over. Sometimes the smartest move is to understand the policy you already paid and then decide whether it still fits your life today. A simple health uncertainty review looks at the first months, the long tail, and the healthy spouse. A practical health uncertainty review starts with real cash pressure, not abstract fear, not generic averages, but your household and where stress would actually show up. Start with the first 90 days. If something happened tomorrow, what expenses would appear quickly? Deductibles, co-pays, travel, missed work, home help, meals, transportation, or childcare. A lot of families can handle a small surprise, but a health event can create several surprises at once. Then look at 6 to 12 months. What if recovery takes longer than expected? Could the household handle reduced income? Would someone need to stop working or work fewer hours? Would you use emergency savings, retirement savings, a home equity line, credit cards, or help from a family? None of these answers are automatically wrong, but it is better to think about them before the pressure is real. Next, consider long-term care needs. Not everyone will need extended care, but some will. That could mean help at home, adult daycare, assisted living, memory care, or nursing facility care. It could mean informal care from a spouse or adult child, which may not show up as a bill, but it can still cost the family in time, income, and exhaustion. Finally, think about what happens afterwards. If the insured person passes away, does the surviving spouse have enough income? Are debts manageable? Are beneficiaries updated? If living benefits were used, how much death benefit remains? This kind of review is not about finding perfect certainty. It's about identifying the weak spots. Once we see where the pressure would likely appear, we can decide whether savings, insurance, family support, or policy changes should be part of that solution. For couples, I would like to add one more layer of review, and that's in both directions. What happens if spouse A needs care? What happens if spouse B needs care? Sometimes one spouse has a pension, one has Social Security timing issues, or one is the caregiver for the other. The plan may not be symmetrical. This does not mean it needs to be complicated. It means we should be honest about the household really works and where the financial stress would land. I would also like to include inflation in this thinking. Care costs, household expenses, and replacement help tend to rise over time. The plan that looked comfortable 10 years ago may need to be reviewed because real-world costs have changed. The goal is to understand the policy you already have and the gaps you may want to close. A policy review should feel like a conversation, not a test. If you already own life insurance, the first step is simply to understand what you have, what type of policy it is. Is it term, whole life, universal life, or something else? Is it still active? What is the death benefit? Who owns it? Who are the beneficiaries? Are the beneficiaries still correct? Those basic questions matter more than people realize. Then we look at living benefits. Does the policy include any accelerated benefit riders? If yes, what triggers them? Terminal illness, chronic illness, critical illness, long-term care, or some combination? How does the policy define those terms? Is the benefit automatic once the condition is certified, or is there additional underwriting or claim review? Then we look at how the money works. How much could be accessed? Is there a maximum percentage of the death benefit? Is the benefit paid as a lump sum, monthly payments, reimbursement, or another method? Are there fees, discounts, or interest? What happens to the premiums after a claim? What happens to the cash value if the policy has cash value? And then we talk about the family. Who depends on this policy? If you used living benefits, would that create a problem for the surviving spouse or beneficiary later? Who would help make decisions if you were ill? Does anyone know where the policy is? That is the kind of conversation I want people to have. No pressure, no jargon for the sake of jargon, just clarity. When you understand the policy, you can make better decisions, whether it still fits the plan or not. I also encourage people to bring old policies to the review. Don't be embarrassed if you don't understand them. Many people bought coverage years ago, filed it away, and have not looked at it since. That's totally normal. Sometimes the review confirms that the policy is still doing its job. Sometimes it shows beneficiaries need to be updated. Sometimes it reveals a rider the client didn't know they had. And sometimes it shows a gap that's worth discussing. A good review should end with plain answers. You should be able to say, here is what my plan does, here is what it does not do, here is who it protects, and here is the next step if something happens. Good questions protect you from assuming more than the policy promises. Before buying or changing a policy, these are questions I would want you to ask. First, which illnesses or care needs qualify? Do not stop at the phrase living benefits. Ask what triggers the benefit. Is it terminal illness, chronic illness, critical illness, long-term care? What does the policy actually require? Second, is the rider included or does it have extra cost? Sometimes a rider is built into the policy. Sometimes there's an additional cost. Sometimes there are several rider options, and the choice you make at the beginning affects what is available later. Third, how is the benefit paid? Reimbursement means you may need to submit bills for covered care. Indemnity may pay a set amount once you qualify. A lump sum may provide more flexibility, but may be calculated through a discount or other formula. These differences matter because they affect how useful the benefit feels in real life. Fourth, What documentation is required? At claim time, will you need a physician certification, licensed healthcare practitioner certification, care plans, medical records, receipts, or periodic recertification? If a family is already stressed, a complicated claim process can feel overwhelming, so it's better to understand the process in advance. Fifth, could the benefit affect taxes, Medicaid, or other public benefits? That is not a reason to avoid living benefits. It is a reason to coordinate. A meaningful claim should be reviewed with the right professional advice. And finally, what happens if you never use the living benefit? That is a perfectly good outcome. Life insurance still has its original purpose. The point is to know what you own, what choices it creates, and what trade-offs come with those choices. The questions are also helpful because they slow the buying process down in a good way. Insurance should not be purchased only because a feature sounds attractive. It should be purchased because you understand what it does, what it costs, and where it fits. If an answer is unclear, that's not a problem. It is a reason to ask more questions. A good advisor should be willing to walk you through the language in plain English. And if you're comparing multiple policies, ask the same question about each one. That makes the comparison fair. Otherwise, one policy may look better only because the difficult details have not been discussed yet. Insurance works best when it's connected to the rest of the family plan. Let me say that again. Insurance works best when it's connected to the rest of the family plan. I like to think of this in three parts: people, paperwork, and design policy. People means the decision makers and helpers. Who would speak for you if you could not speak for yourself? Who would help coordinate care? Who would know where the policy, bank information, and key documents are? Who are the beneficiaries, and are they still the right people? Families often assume everyone knows these things, and then discover during a crisis that nobody is quite sure. Paperwork means the documents that allow people to act. That may include powers of attorney, healthcare directives, HIPAA authorizations, beneficiary forms, account access information, and the actual insurance policy records. I'm not giving legal advice here, but I am saying that insurance is easier to use when the right people can find the right documents and have the authority to help. Policy design means the insurance itself. How much coverage is there? What type of coverage? What riders are included? Are premiums affordable over the long term? Does the policy support the purpose you have in mind? If living benefits are part of the plan, do they align with the health uncertainty you are most concerned about? The reason this matters is that a policy sitting in a drawer is not the same as a working plan. A working plan is understandable. The family knows where it is. The beneficiaries are current. The owner understands the choices. The advisors can help interpret the policy when needed. So after today, I would not want anyone to think that I need a product. The better thought is that I need a clear plan, and insurance may be one part of making that plan stronger. That is especially important for adult children and caregivers. If they're going to be the ones helping someday, they do not need every private financial detail today. But they may need to know that a plan exists and who to call. A little organization can reduce a lot of stress. A policy review, updated beneficiaries, and a basic document checklist can make the difference between a family scrambling and a family knowing the next step. This does not need to be a dramatic family meeting. It can be as simple as telling the right person, I reviewed my coverage, the documents are in this folder, and this is who to call if something happens. Schedule a plain language review of your coverage and living benefits option. Let me bring this home. Planning for health uncertainty is not about predicting the future. It's about making sure that if health changes, you and your family are not forced into making every decision from a place of panic. The goal is to preserve choices, protect the people you care about, and understand the tools available before you need them. Living benefits can be one of those tools. They may allow access to part of life insurance death benefits during a qualifying illness or care situation. That can help with care expenses, income disruption, household costs, or simply buying time for the family to make thoughtful decisions. But living benefits also have limits and trade-offs. They depend on a policy language. They can reduce what remains for beneficiaries. They can involve fees or calculations. They can raise tax, Medicaid, estate, or public benefit questions depending on the situation. So they should be reviewed carefully, not assumed. The next step is simple. If you already have life insurance, let us review it in plain language. What do you have? What does it do? Does it include living benefits? Are the beneficiaries current? Would the coverage still fit your family if a health event happened? If you don't have coverage, or if your coverage no longer fits, we can talk about options. No pressure, no confusing lecture, just practical review of your goals, your budget, and the choices you want to protect. So my invitation is this. Schedule a policy review. Bring what you have. Bring your questions, and we will walk through it together. My name is Jay Cohen, and I'm a licensed agent with Gibbs Insurance and Financial Services. You can reach me at 352-661-7858 or by email at jay@gibbsinsuranceocala.com or online at www.gibbsinsuranceocala.com. Thank you for being here, and I would be glad to continue this conversation. And I want to leave you with this encouragement. Reviewing your policy does not obligate you to buy anything. Sometimes the best outcome of a review is simply peace of mind. You understand what you own, you know where the paperwork is, and your family has a clear path. If a change does make sense, we can talk about it. But clarity comes first. That is the spirit of this whole webinar. Practical, plain language planning before a health event forces the conversation. The best time to have this conversation is before it feels urgent. That is when decisions can be made calm, values can be clear, the plan can be shaped around what matters most to you and the people you love.